welcome. This is Marianne, and I'm a licensed insolvency trustee with Allen Marshall and Associates. During a recent conversation with other trustees in the office, we came to a disheartening conclusion. Consumers are not always being given full disclosure when borrowing money against the equity in their home. This came to light when we realized how many debtors we speak to have no idea that the loan they obtained to pay off some bills is a registered second mortgage on their home. So we asked ourselves, how can that be? Well, we did a little bit of digging, and it turns out that some financial institutions take steps to ensure that debtors don't know this important fact, which we found to be quite disturbing. I reflected back on my own use of alternative financing in the past to see if I could recall a time where I wasn't given the full facts up front. I couldn't, but then I know the ins and outs of financing against my home, and I would have gone in with that level of financial literacy. Something sadly that is lacking in our country. Now, I feel very fortunate to have worked in the industry and have learned all that I have. And even that has not always kept me from making what I would be considered to be poor financial choices. So imagine relying on someone else to fill in the blanks for you. So during our research, we came across two past employees of a well-known high-interest financing company. We shall call them Employee 1 and Employee 2. And I asked them both to share their experience in working with the public in this capacity. So I'd like to welcome Employee 1 and Employee 2, who are going to remain anonymous, but if you would please unmute your mics. All right. Hello, Employee 1.
Hi.
Hi, Employee 2.
Hello.
Hi. Thanks so much for agreeing to come on and chat with me. And I know we had some preliminary discussions before, and I'm really looking forward to sharing that information with our viewers. So I'm just going to start off because, of course, we're keeping your identity secret. So, but just a little bit about you in terms of working in the industry. So maybe each of you could tell us how long you were employed with said company, or unsaid, because we're not naming it, and what led you to work in the industry. So I'll start with Employee 1.
Well, I was in the industry for high finance for about 7 years with the said company, and the reason for the hire was because I had sales experience from a past employer, so that was a big asset to work there. And I was 21 years of age, so I was new to the finance world too, so I was there for about 7 years.
Okay, Employee 2.
Well, I was with this said company for about 3 years, and then had an additional 14 with a lending institution. Again, the same with Employee number 1. I had previous experience with sales, and it interests me to get into financing.
Awesome, thank you. So, so maybe each of you could give us an example of someone who would come to you looking to borrow money. So, Employee 1.
It ranged from all different income levels. Some were in, high stress need of needing it and couldn't get the money anywhere else. So we would lend the money at, a higher interest rate, of course, than they could get it at the bank. But we also had clients that would come and, they just wanted the money quick and fast. And so we, could deliver the money, in a day's notice kind of thing. And that sometimes also led to, they had intentions of paying it off, but it didn't happen. And then they would become a client, and we would be able to solicit them again to borrow money. And so sometimes they didn't think that they were going to be there for long, but we all know how that goes.
Yeah, absolutely. So Employee 2, maybe you can give us an example as well, which may or may not be the same.
Sure, yeah. Most of the clients that we dealt with were people who were looking for a fast solution, just a real quick solution to their financial problems. And again, like Employee number 1 said, they were normally looking for a short-term solution, but it ended up being a long-term. Mostly medium wage earners. Christmas loans were very popular, vacation loans, just things that were quick and easy. And again, we did them on the spot or within the first day.
Yeah. Thanks a lot for that. And, and I know based on my own experience, I'll share a little bit of my personal story. I've used a couple, excuse me, a couple high finance company loans because out of necessity. And so, one was basically our heating source was gone in our house and we needed to get a new heating source, and the banks weren't able to help me. And winter was coming and stuff had to be done, and I knew that if I went there, I was going to get the loan, which kind of leads me to the next question. I suspect that those seeking financing in this way have already exhausted the more traditional means of financing. So, banks. How difficult was it for you to be able to provide financing to those who walk through your door?
Typically, we did have declines. Typically, we could approve the loan, I guess is what I'm trying to say. But we also did have the declines. But we could do, with home equity loans, we could finance 100% of the equity in their property, where the banks could only do 80 or 90 at the time, I guess, when I was there. But so most of the time, we could work our way around getting them approved.
Oh, right.
Even if they had slow credit in the past.
Yeah, and the percentages, that's a good point. Employed?
Yeah, most of the people that came in were, even what they were looking for. Our system was really slick. It was you got a light would show up of what color we could and what we could offer these people. So even if the person was coming in looking for, let's say, a quick $1,000 loan, if the system generated a $5,000 approval, that was the upsell. Oh, well, look you can get this, and 9 times out of 10, the people, they would take that. So
interesting.
Yeah.
Okay. So I'm wondering if you were, it's kind of on that note, were you encouraged in any way to offer secured loans versus unsecured loans? Because I imagine lenders would want as many secured loans as possible, given that they are well secured.
Oh, most definitely. That was the golden ticket to make sure that, if they didn't pay, that we could call them and tell them, we have a mortgage on your property. You could lose your property if you didn't pay the loan. But in the eyes of the debtor, when they were doing it, they really needed the money. So if we were able to pay off a credit card and maybe the loan that they had with us now, and then maybe offer a little bit of a home improvement loan, they were going to get a better interest rate. So it was really enticing for them.
Yeah. Employee too?
Yeah, and she is exactly right. We get the people in the door. If they called for a couple of $1,000s, then when you get the full picture, if there was any ability to do any type of equity loan, that was where you went, of course. Get them in the door, give them that few $1,000s, and then put it all out in front of them and say, look, this is what you could have. We could pay off this, this, and this, if only we could secure it to the property. So, and again, we were doing 100% of what the value of the property was worth, which was more than the banks could do. So it was always a good sell.
Yeah, and that's interesting that people come in for something specific they want, but then potentially they're offered more money because they qualify. And of course, we see that just generally in financing anyway. So in talking about secured and unsecured, in your opinion, do borrowers understand that secured means it's a mortgage?
Well, the term that we would use then was a home equity loan. So to them, if you didn't say mortgage, sometimes, they didn't really get the full capacity of it. Now, in saying that, they did sign mortgage documents. It had to be commissioned. So it's there. They know it. But I think a lot of the times that they were so stressed that it was just they wanted the fix, right? And this was a quick fix. And just another note on the other question, there was a 90-day prepayment penalty. So that was one of the things that we would say, you can pay this out in 90 days with no penalty.
Right.
So, so it was like, when your first mortgage comes up for renewal, what you can do is go back to your bank, because then your credit's going to be fixed and you can take this home equity loan and put it in with your first mortgage. And
yeah.
If you've got creditors calling you, or know that you can't make your bills, and most people want to pay their bills, they'll do it just to take that stress off of them.
Mm-hmm.
Yeah. So just to employ too, just before I come to you, because I just wanted to make a comment on that, because that's, I mean, it's a good point. I think that's the intention. I know that when I had to use the financing, I was well aware of the consequences. And the purpose was that it was a short-term solution, and that as soon as I was able to, I would do a refinance at a low rate. And I actually did that both times. I borrowed money from high finance places. I paid them out within probably 6 months. But it's interesting that, you can pay it out in 90 days because not always, but sometimes, of course, they're coming to the high interest places because there isn't enough equity to finance it, or they don't qualify. So the chances of them building up equity or qualifying in the 90 days is probably slim, but then I'm sure there would be some people that could take advantage of that. I just wanted to comment on that.
Yeah.
So back to our question, understanding secured means a mortgage, employee two. What are your thoughts on that? Do you remember the question? Are you there, employee two? Oh, do we lose employee two?
I don't know. I don't.
Okay. Okay. I'm gonna go on to the next question, and then we'll see if employee two has rejoined us. So tell me a bit about the document process. Did you receive much training in reviewing documents with borrowers?
Nope. Basically, you were trained by another employee, that's been doing it. But I can literally remember driving to work one day when I did my first Equity Plus, because there were so many more documents that I thought I was going to pull the car over and just, wanted to be sick, because I was young when I first started there, and I didn't have the knowledge that I should have. I was there 7 years, and when I went to the bank, when I left there to go to a financial institution, and it really made me realize how little training we did have.
Right. No, I see our second employee dropped off, so we'll continue on. And oh, did you get a message?
Yeah, her system went down.
Okay. Well, we'll see if she can get back on. If not, I'll continue with you. And then if she comes back on, we'll bring her answers in. If she doesn't, I'll make sure I get the answers and put them in the written broadcast. Okay. So sorry, we were just talking about the document process. So it was a little overwhelming, is what I was hearing.
It was very overwhelming. Very overwhelming at times, because you also had to sell other products along with the home equity loans.
Right.
So you had to make sure you knew all those products as well. And
so there was a lot to know.
There was a lot to know. Yeah. And I mean, the worst fear would be is someone calling you and you not offering a life insurance or a disability or, critical illness, and something happened to, either a spouse, and to call back, and you wanted to make sure that they knew what we did offer too.
Right. Okay. So tell me a little bit about what was the timing like? So I see employee two coming back. So I'm going to hold off on that and just give our second employee a chance to come in here. I probably have to admit them. Yeah. Hello, employee two. Are you back?
I am.
Hey.
Sorry.
Okay, that's technology. So that's okay. I'm going to backtrack because I was just asking employee one, and I were just chatting through some of the questions I have. I'm just going to backtrack and get your input on the last two.
Sure.
So we're talking about secured versus unsecured, and the question
Right.
I think we lost you was, in your opinion, do borrowers understand that secured means it's a mortgage?
And I would have to say a lot of them do not. Again, it's that quick money, save them from a situation that they are in. And even when I take that situation and I move it into the bigger banks, when I worked at the bigger banks, even doing a mortgage and explaining everything straight down to the penny, I would still get the questions, but this is not a mortgage, right? It's just a lien against my house. So, and that is the same thing, but sometimes it didn't portray, depending on the wording that you used, right?
Yeah, that's interesting, because that's what this is why we're doing this interview, because we're having people come in to look at debt solutions, and we've run into this more often than not, where there is a second mortgage and they stop paying it because they don't understand it's a second mortgage. And even though it might have been said it's a lien on your house, and they're quite surprised to find that it's a mortgage. And so,
Every day, Marianne, we hear it every day.
yeah, it's the same thing. So, so tell me a bit about, and employee one already answered this. So tell me a little bit about the document process. Did you receive much training in reviewing documentation with borrowers?
With the high finance, no. I mean, training was really minimal, and we kind of skimmed over it. And when I say skimmed over it, we skimmed over it with the clients too, and suggested that they read it really well when they got home. But I mean, that wasn't going to help them any once they signed all the documents. So,
yeah. And we all know what those documents are like. And, even the caption of this interview is read your contracts for information protection. Raise your hand if you haven't read an entire contract.
Oh my goodness.
Yeah.
Yeah. So it's I say read them, but I know that it's very challenging for people. One, you might read it and not understand it. So we were just going into the next question. So we'll kind of jump back to employee one. So I'll just repeat that. So what was the timing like from the moment that someone walked through your door asking for help to the moment that they received the funds? Just kind of walk us through that process.
If it was just for a loan, like I said, could be 24 hours. It could be on the spot, as long as, they had the pay stub and that kind of thing with them. But as far as the home equity loan, we still did have to get an appraisal. So, depending on the time when you get the appraisal, how long that would take. And then, of course, with land titles, once that came aboard in 2001, we could do it within 48 hours.
Wow. That's a quick turnaround. Employee.
Yep, she has it all right. They were quick. We could do same day. We could do same right on the spot, as long as they had everything that we needed in front of us. And again, the secured loans on land titles, 48 hours in and out.
Wow. And no wonder people go there, because if they're in a panic,
for sure.
Of course, we want the money quickly. We don't want to have to wait. So I'm curious to know, were borrowers advised to get independent legal advice at any time throughout the process?
Yes, they had to sign off on independent legal advice. That was part of the package that they signed, part of their mortgage documents, of course. But again, it was like, once you sign this, you're agreeing to everything that is in this contract, and you can't come back on us. And the documents were done through First Canadian Title. And so yes, they did have to sign off on independent legal advice. But again, most clients would not understand what independent legal advice is. So
yeah, I would agree with that. Employee two?
Yeah, and that's funny, because employee one, I don't remember that signing off, but and maybe it was there. But again, going over the documents so quickly, and even working for the bigger bank, I only remember one time ever suggesting independent legal advice to clients, because it was usually something that it was just kind of there. But again, in high finance, I don't even remember it being there. And that's sad to think that.
Yeah.
Well, and I wonder how many, as I was asking the question, I was wondering, has anyone ever obtained legal advice in loan? Did you ever see anyone do that?
For me, only once in my 16 years.
Yeah, I think I came across it maybe once as well, but there was something else that was involved that caused them to go get legal. I don't think we wanted, and this was at the bank, we didn't want them to sign the papers until they went out and got their own independent legal advice.
Right.
To be certain.
But no, not normally. It was sign. You can sign here.
Interesting. This is great. It's really great to just kind of get that, background look at how things operate within the company. Sorry, go ahead.
No, you carry many hats when you're lending, because now back in the day, you'd have to go and see a lawyer. Well, now you don't, right? You don't have to go see a lawyer. So you're collecting all the information from them. Then you're, having them sign all the documents with you. There's no middleman. It's just you and that client. So they put a lot of faith into you too, right?
Yeah. And
they're relying on us. They were relying on us when I look at it, which is kind of sad, right? To make sure that they, get all the correct information.
Yeah. Well, and that must be challenging because they're relying on you to get the correct information and sometimes, make the best decision. But then, you are an employee and you're required to,
Yeah.
reach targets and do things. And, I can imagine that would be a challenging situation to be in.
Yep.
That's right.
So I'm curious to know, did you enjoy selling financial products? Why or why not?
I love selling, actually. That's all I knew until I came to Ellen Marshall and Associates. And, it's been said to me, we're offering a service and you tell them how our products work and they make the decision from there. At the financial institutions, it's more of how much can you get, right? Because you have the targets. So you pull a credit bureau and they called you and they want $1,000 for whatever, or whatever it might be, $10,000 to fix the roof. And you're in a search. What credit cards can we get and how many can we pay off? What do they qualify for, right? And if it wasn't a personal loan, it was go for your mortgage target. Let's put this into a mortgage. And so a lot of the times, I will say, we did help a lot of people. But I say to my clients now, maybe they did you the favor by not doing the consolidation loan for you. Yeah. Because what's going to happen is you're not going to have enough disposable money to live off of. And then what's going to happen is you're going to go back to your credit cards. So you're going to be right back in that position again. So it's time that you call somebody. Like, good for you for making the call so that you can just see what your options are.
Yeah, absolutely.
A lot of people don't know. I wouldn't know if I wasn't in this business. I have all kinds of, friends and families that ask questions, well, what about this or what about that? So.
Yeah, good point.
Yeah.
Employee too.
Oh my goodness, Marianne! It such competition, such sales competition. And there was a lot of pressure to hit your targets. And like employee one says, you got that as soon as you got that credit bureau, and you could see it. You were like, it's like predatory lending. You needed to grab everything that you could grab, and go with it. And not the concern. When I think back, the concern was not where I was leading these people. It was getting that goal, because that pressure was on us to meet our goals on a month-to-month basis. And you'd only get to the 31st of the month and you'd be right back to where you started from and have to do it all over again. So did I enjoy it? No, I didn't enjoy it. And I see the ramifications of it now when I see the people that I dealt with are on our lists. And it's sad because the clients didn't understand the cost of what they were doing, the cost of the borrowing.
Yeah.
In the long run,
And that's right. Yeah. And so, it's interesting because, employee number one, you like selling, but not necessarily selling those products. And
yeah. Well, it was like you did see relief on people's faces, because they, all those payments are gone. You put that payment into one payment, and that's all they want. People want to pay their bills, but sometimes it gets to a point that you can't. So it was at certain points, especially with the bank, I did feel that I was helping people.
Oh, the bank, absolutely. But the high finance, it was that happiness was only for a short period of time.
Very short-lived.
Yeah. And I'll give kudos where kudos is due to these companies, because again, I use them from a very financial literate place. And because of that, had heat for winter where maybe I wouldn't have. And, I fell into that void where, because I had some issues with my credit score, I couldn't get financing at the bank. And even though, I'd been a customer for 20 some years, I had a budget, I knew that I could afford the payment. None of that mattered because my credit score and I, I won't get in the big long story of it, but, I had 2 files at Equifax and it destroyed my credit score. And like, none of that matters, which might be a whole nother broadcast. But, so kudos to them for, at least they loaned me the money. I'm sure they felt good because they were able to help me. I didn't like the interest rate. I did take a second mortgage against my property so that my rate was, I forget what it was, but 20% instead of 30 or something, more crazy than 20. But, my goal and objective was I knew I could pay it in my budget. I knew I wanted to get out of there quickly. And I did what I needed to do to get out of there quickly. But I see so many people that they, like you said, they're desperate and they just want, I want to pay my bills, or, your Nova Scotia Power bills in behind. They're going to disconnect your power and there's nowhere else to get money. And, it can be a short-term solution, but more often than not, it just ends up being a long-term cycle that people can't break out of. So speaking of that last point, and as our ending point, what advice would you have for those seeking financing and looking to high interest lenders to help them get out of a tough situation? Employee one.
Well, I think, and I see it, every, quite frequently, just make the call and find out what your options are so that it doesn't mean that this is your option, but just to get more information, take the consultation. It's free, and there's no, you don't have to do it in the end, but maybe we can offer you some type of advice or see something that you don't, or you don't have the means to know.
Yeah, good advice. Employee two.
Yeah, there are options for sure. For sure, there are options. Speak to a licensed insolvency trustee just about your options. They're here to help, and they can explore all those options with you and explain the pros and cons and the cost of each.
Yeah. And that's, I think that's why it's so near and dear to my heart, because, I see people coming to see someone like me after they've gone and done the financing. Then they're coming in, then I'm telling them there's nothing we can do with this loan because it's secured against their home. And, I'll have people come in and they'll go, I want to look at financing here, or I want to go to the bank, or I want to do this. And I'll say, go get the information. Don't sign on the dotted line. Just, go see what they'll do for you. And then come back in and let's sit down and we'll look at this. And and fit it into your budget and see if it's manageable and figure out how long it's going to take to pay. And I mean, I love when people come to see me and I can send them out the door and they can do something else that helps them avoid having to file proposal or bankruptcy. To me, that's a win.
Sure.
But the other one is keeping them from doing something that's just going to be a Band-Aid solution and not get them out of debt and putting them in a program that actually is going to give them some light at the end of the tunnel. So,
I mean, how many times have you heard, I wish I would have called you sooner?
Yeah.
all the
So
time.
many times.
Yeah,
right?
it's probably the number one. I think there's two or three of the top phrases. And one is,
Yep.
I wish I'd done this sooner, or I wish I'd called you before I went here. Absolutely.
Right.
Yeah. Okay, well, I'm going to end this off with, thank you both so much. And this was really fun just to kind of get a background view of what happens on the other side of the financing. And I really appreciate you taking the time to talk to me. So thank you both very much.
You're
Thank
very
you.
welcome.
All right.
Have a good day.
You too.
Bye now.
Bye-bye.